Everyone, I'm Karan and welcome to Karan's Gyan. Today I'll be talking about an expert's opinion. And our expert for today is Mr. Shankar Sharma. So, Mr. Shankar Sharma is the Vice Chairman and Joint Managing Director of First Global. First Global is a financial services company. It provides brokerage services. So, Mr. Sharma says two things. The first thing that he says is the market is being driven by beaten down stocks, which I completely agree to. And the second thing which he says is Geo deserves a valuation in trillion. Okay, now I can't completely say this, but it can deserve a valuation of trillion. I'll have to delve more into the numbers of Geo to say that it deserves a valuation of trillion. But yeah, I think Geo should deserve a higher valuation than it has right now, but I won't say it deserves a valuation of a trillion. So, talking about key takeaways. So he's saying market is being driven by beaten down stocks. So what has happened is since the lockdown, a lot of people are sitting at home, and because of boredom, sitting at home, they feel all right. Let's go open account in the stock market and start, gambling in stocks. I won't say investing in stocks, gambling in stocks. They would buy beaten up stocks. By beaten up stocks, I mean stocks that are doing poorly since the past few months or since the past few years. They are either doing poorly because they are either bankrupt, they have a cash crunch, or they are in an industry that has downturn. So in particular, I'll be talking about stocks like Alok Industries, India Bulls Housing Finance, LIC Housing Finance. I won't say these are bad shares, but these shares are basically in an industry which are facing a downturn. So beaten down stocks are driving the market. Not good quality stocks, but beaten down stocks. So that's what he's saying. The rally is being driven by beaten down stocks and not quality stocks. In the last 3 months in particular, of last 35 days, the quality stocks like Hindustan Unilever, Nestle, Asian Paints have not rallied. And I agree to it. These are quality stocks. If I compare it to other stocks, they haven't rallied much. And these are quality stocks, and they should rally in a market in which there's a lot of uncertainty. In fact, what has rallied is Bank Nifty, Realty, and stuff like which I consider low quality of the market or high beta of the market. So he's saying Bank Nifty. So basically, banking stocks have rallied. Real estate or developing based stocks have rallied, and stuff which I consider low quality. And he's saying or of high beta. So to those who don't know what high beta is, beta means, for example, if I say beta is basically a Greek symbol of B. So beta is used to see how risky a stock is. For example, if I say Alok Industries has a beta of 2, so it means if Nifty rises 100 points, Alok Industries would rise by 200 points. In the sense, if Nifty rises by 10%, Alok Industries would rise by 20% because beta is 2. However, if Nifty falls by 10%, Alok Industry would also fall by 20%. So if I compare it to market risk, so beta is market risk. It has high market risk. So if the market is going up, it'll go up. Based on that proportion. If the market is going down, it'll go down. So this is what beta is. So for example, gold has a negative beta. Gold has a beta of, for example, minus 0.5. So if the market has fallen down by 10%, gold would increase by 5%. And if the market has raised by 10%, gold will decrease by 5%. It goes opposite. So this is what beta means. So he's considering Bank Nifty, Realty stocks to be of low quality and high beta stocks, which I completely agree. If I see the current rally, low quality stocks have been driving the market. It's not high quality stocks. Even among banks, HDFC Bank or Kotak Mahindra Bank have not rallied, but RBL Bank has doubled. So that's what he's saying. HDFC Bank and Kotak Mahindra Bank are the top quality banking stocks in this industry. and they haven't rallied as much as RBL Bank. RBL Bank has doubled. So if you go and see RBL Bank stock, you'll see RBL Bank has doubled in the past few days. And this is what he's saying: RBL Bank is a beaten down stock. Sharma says, now he's talking about Reliance basically. He's saying that he has invested in Reliance and he believes that the valuation of Jio is low and unjustified. It deserves a valuation of $500 billion. As of now, Jio has a valuation of 60 to 65 billion dollars, and in this company, an investment of 50 to 60 billion dollars is made. So after the investment of 50 to 60 billion dollars, it has a valuation of 60 to 65 billion dollars. It has this valuation, but Sharma is saying that this valuation is unjustified. He's saying that it shouldn't have a valuation of 60 to 65 billion dollars. It is really low. It should have a valuation of $500 billion. That's $500 million, and that's almost 10 times this amount. All right. So if Sharma is right, and if he thinks that Geo is, you know, valued not as much as it should be valued, it Geo should become a rocket in the coming few months. So if you guys have the same opinion of Mr. Sharma, I would say bet big on Reliance, and Reliance is a good quality stock. It can give you good returns over the coming years. It has strong business and it has disrupted the entire market. It has made a killing in the market, has destroyed every other market participant in the telecom industry. And seeing how Reliance is performing, how it has become debt free, I think Reliance is a very good stock to invest in. Okay, well, that's my opinion. Moving on to point number 7. He's saying there are still problems ahead, and this moratorium. So basically he's talking about the moratorium given by RBI. He's saying this moratorium is encouraging and will encourage a lot of bad behavior. So he's saying that people who have money, in seeing moratorium, they would say, all right, RBI has given us has given us some leash, and RBI says, all right, you won't get interest for the next 6 months, so why don't we take advantage of this moratorium? Why don't we, like, wait for 6 months and then let's see what's happening in the market? So it is encouraging bad behavior. So those who can pay, they're choosing not to pay. All right, I understand a lot of people are in trouble. So people who are in trouble and who are not paying, it's understandable. But people who are not in trouble and they're choosing not to pay, that is bad behavior. So he's saying we have to be careful with financials, as it is the riskiest end of the market. So in the last video, I told you about how Axis Bank has been downgraded, and has been downgraded to junk from investment grade. It has been downgraded to junk, and basically this is what Sharma is saying. He's echoing what S&P rating said. He's saying the market is risky right now. Fine, loan quality, loan book quality is going to decrease, and it's a lot of risky. There's a lot of risk in this market, and you need to be careful. So he's saying small caps have witnessed significant gains over the last 1 month period. He has attributed this rise in small caps to the fact that small caps have been in bear market for the last 3 years. So small caps were on a rally till 2017. They had made lifetime highs, but since 2017 they have been falling, and they were in a bear market phase. And now people think, since a lot of retail investors have entered the market, they're idle at home, they want to earn a quick buck really fast, they are bottom fishing. They're fishing for bottoms in the small caps. Highs they're seeing highs of stocks that are trading at stocks that are trading at 10 rupees right now. They'll see the high is made at 50 rupees, and they'll say, all right, it has gone to 50 rupees. I think this is the bottom, and let's put money in the stock. It'll go from 10 to 50 again, and I'll earn 5 times my money. And this is not a good psychology. That's why retail investors always take a beating in this market, and they are never the winners. Again, I would like to warn all my viewers who are watching this video: stay out of all the small cap, mid cap stocks for now. Stick to large cap, high quality stocks, because they are the stocks with good fundamentals, and they are the stocks that are going to grow in the future. These small caps won't take you anywhere. Instead, go to a casino and gamble your money there. At least you'll have fun. You won't have any fun in the stock market if you're investing in beaten down stocks. This is my opinion to all my viewers, and I want you to take this opinion very seriously. The last thing he says, right now the trend is to buy beaten down stocks, buy buy some of the large caps, or handful or small caps. So he's saying you should pretty much buy large caps right now, okay? Or maybe some, if you want some exposure in small caps, buy handful of them, but mostly buy large caps. He's saying one also needs to be very vigilant. I'm not going out and starting to believe everything. So he's saying that you shouldn't believe whatever is coming in the news. Alright, you should be very careful. You should use your own brains rather than listening to an expert opinion. Alright, and this applies for Mr. Shankar Sharma here also. You should try to understand what the guy is saying and not believe what he's trying to say, and not say that, all right, if he's saying this will happen. No, these are just experts. It doesn't mean that they're gods. If they say the stock price is gonna go up, it doesn't mean it's gonna go up. They're just giving their opinion. It is your money, and you're responsible for your own money. They are not responsible for your money. And he's saying, for the stressed part, there are troubles in the market ahead, and I am sure about it. Now, even I agree with the statement that market can face a downturn in the future. S&P has given India, you know, S&P says that India is going to face recession in the coming few months, and you should tread carefully. You should invest in good quality stocks as of now, and maybe acquire risk later when the market has stabilized and it's not as volatile as it is right now. So, guys, this pretty much it is about the opinion of Mr. Shankar Sharma. And if you guys agree with Mr. Shankar Sharma, please hit the like button. And if you disagree with Mr. Shankar Sharma, comment and tell me why you disagree with him. And I might get back to you and maybe try to look it from your point of view, and it might help me in understanding what my viewers are understanding from my videos and what my viewers would like to see. Alright, guys, this is it. Have a nice day.